Well, it looks like there's a housing bubble being re-inflated. Now, the major media is saying it's not a bubble. It's not. They're not re-inflating a bubble. But when you're doing all this quantitative easing, the money has to go someplace, and it looks like it's going into the housing market. Last year, it looks like it was approximately roughly 9.5% housing prices went up that much, roughly about 9.5%, which is the most it has since 2006, which was at the height of the bubble, which in turn is actually shoring up the bank's balance sheets, because as housing prices go up, their portfolios look better, their loan management looks better, and that type of stuff. If you follow along, like housing price increases, like if you follow the curve, the highest price of increase was back in 2005 and 2006. That's when the bank's balance sheets look the best. It's actually a fairly decent correlation. And then when you saw housing drop off like a stone in 2000, later 2007 and 2008, that's when we had the financial crisis. Well, what people like CNN are recommending right now is there's never been a better time to buy a house. Now they're saying to buy it because they're looking back and saying the curve is going upward. So there's a lot of incentive for people to buy a house now, because 30-year interest rates is about 3.9%, and your equity in your house went up about 9.5% in 2012. They're expecting this pattern to continue forever. That's the big mistake that everybody made before. Now, maybe it's not a terribly bad time to buy a house, but what people do is they buy too much house. They buy too much house. They can't buy, what they absolutely need versus what they want, and that's 99% of the problem. A lot of times, people buy way too much house, and not just by square footage, but by entertainment centers. And I can comment a little bit on that, because being in the housing industry, in the accounting industry, basically in the housing industry and construction industry, if there was an upgrade offered for like a 40 or 50 year roof for a very minimalistic cost, or an upgrade offered for even more thick insulation with higher R value, most people would not opt for that, but they would opt for entertainment centers and upgraded carpets and things like that, versus the actual something that you really can't change too easily in a house. They'll upgrade, they'll want to upgrade various, the type of refrigerator or stove they get or whatever, but maybe that's not so bad as the entertainment center. But, to change a roof out later, or to have a roof that lasts 10 or 15 years longer, and is much stronger for hurricanes and things like that, or have an R value in your insulation that's much higher, that to me actually will pay you back. Will pay you back, no problem, especially in air conditioning and heating bills. But most people will opt for that entertainment center, no problem. I've noticed that. That was something I always said about the average American person. They'll go for fun now versus durability and integrity later. That's how a lot of people are. So they do tend to buy too much house. But it looks like this housing bubble is being re-inflated. Now, I know Lindsey Williams. I don't really totally discount this guy all the way for everything he says. I know he's selling DVDs, and I don't think he makes everything up. But he said the next time that there's going to be a major financial crash, there's not going to be a major bailout or anything like they're going to do. They're just going to let it go. And, I almost look at how the banks are being shored up right now. They're buying mortgage-backed securities, and you're buying troubled assets and all this type of stuff. It's all basically related to the building and real estate field. And now, this is actually helping bring up the price of real estate more, which is causing more new buyers to go into the market, because now they can get, they can get in there, because it's like there's more of a speculation that it's going to go up, it's going to go up, it's going to go up, which makes, and then as it's going up, it's making appraisal values go up, which means they can get more loan and that type of stuff. So like the same type of problem is kind of creeping in again, And the next time it goes down, we have a problem in the banking industry, and usually when there is a problem in the banking industry, that's related to the real estate and housing market and construction markets, when the price valuations fall, well, there's not going to be a bailout. And, it's quite obvious that you're not going to see like almost 10% price growth every freaking year. And, in the real estate industry, that it's not going to be. It's going to be sustainable maybe for a while, but I think a lot of it actually is due to Fed policy. And it's like basically it's not really wealth that's there unless you sell it right away, and you bought something for $200,000 and you sold it for $220,000 the next year. Then you got the money, but that's what not most people do. That's a long-term hook. And the banks are going to be owning these people forever. Which I say is going to happen is eventually these people are going to get caught upside down, and then the Federal Reserve is going to buy troubled assets, quote unquote, again, which have been allowed to be fueled again by this, looks like another bubble blowing up here in the real estate market. And they'll buy them up basically for nothing because the Federal Reserve creates money out of nothing. And that's what I think is going to happen. Is going to continue this game as long as possible. But I don't think the game has too much longer to go. My suspicion is that most of the problems in this nation, like as far as the real financial collapse hitting already, is going to hit during the Obama administration and maybe continue into, and it'll be part of what happens in the next administration. But I think a lot of it's actually going to be here solidly and apparently in the Obama administration. So, for people holding medals and basically holding their breath, wondering what's going to happen, I don't think we have that much longer to go. Because when things actually heat up or fall apart, it happens quickly. And if you noticed, if you've paid attention very carefully to the real estate markets and the NASDAQ bubble and everything like that, it's like things are going along great, and all of a sudden, wham! Or, if you even look back to the 20s, late 19th stock market crash in 1920 and the one in 1932. Things go along great, and all of a sudden, wham! It happens real fast. So, it looks like there's another real estate bubble being pumped up here. CNN says, no, it's the best time to buy a house. And, that could be, but, like I said, most people buy way too much house, and they have to finance all these extra options and stuff, and knowing that as a builder, options are pretty much doubled as to what they cost them. And if there's going to be one option they should probably put on here is the 40 or 50 roof, metal tiles or whatever it is, and much thicker insulation, because those are things you really can't upgrade too much easily later on. Whereas, you can change out a carpet later on and that type of stuff, or refrigerator or washer, dryer or whatever, to a better model later on when it's on sale versus paying top dollar when you buy the house and having it financed. But this is typically why people don't do it, because when they're spending $250,000, they think, what's another $15,000? It's $15,000. That's what it is. People spending bigger bucks, they don't look at what they consider $15,000 pennies. Then they're making very foolish decisions, and actually all those pennies add up greatly. And this is really why the average American has gotten themselves in so much financial trouble. They do not watch the pennies. And but looks like another financial real estate bubble is brewing right now, with home prices going up over 9% in the last year, and with 30-year mortgages at 3.9%. The average major media, CNN and all that type of stuff, are telling people, buy a house now. It's a great deal. You can't go wrong. Well, you could go wrong, because basically this kind of scenario is not going to continue on forever. And when it does break, the next time there's a major financial crisis, according to Lindsey Williams, and this may be true though, there may not be a way to bail out the banks. They've been using QE. There may not be a way to bail out the banks. Because part of the reason the banks are being propped up right now, it's not directly through Fed buying up troubled assets, but it's also through the general real estate industry going up, up, up. And that trend, the way that's continuing at the rate it's gotten back into, is probably not sustainable. So I don't know how many years it's going to take, but I think that everything actually is going to really be very apparent at some time during Obama's second term. I think he's set up as the patsy. He's going to be the guy that's going to be in there when the fall really occurs. And now looking at the numbers of what's going on with the banks and how everything's looking good on their balance sheet, it's not really solid. It's based upon the Fed buying up their troubled assets and the fact that we now have a real estate market that's taken off pretty fast, like it did back in the before the crash. So we shall see.